Our next question comes from Teresa. Teresa, please go ahead.
From where, Teresa?
Hi, Ron. I'm from Clearwater, Florida.
Okay.
I have a home in a nice area. It's a sinkhole, or it did have a sinkhole, and the owner's willing to sell it for the land value, which is about $50,000.
So there's a house on it?
There is a house on it. We haven't gotten an engineer out there yet, but we wanted to.
Well, you wouldn't do that anyway. You put it under contract.
Okay. Because what we were thinking is try to wholesale it.
I don't know. First, put it under contract, then get that engineer out there, because that's going to determine whether you go forward or not. And let's suppose it didn't have a sinkhole issue. What would the ARV be?
The ARV would be $150.
And they're going to sell it to you for $40.
Actually, $50.
$50, and do they want cash?
Yes.
Well, let me tell you something. There is no land worth $50 if the ARV on the house is only worth $150.
Well, maybe 44 something.
Even that's too much still.
Yeah.
Too much. So either your ARV is way low or your land value is way high. One of the two.
Okay.
Your land value shouldn't exceed more than 20% of your ARV.
More than 20. It shouldn't exceed more than 20%.
I promise you, a builder selling a $150,000 house wouldn't even pay $30,000 for the lot.
Okay. Yeah, that's what it shows up on the tax record.
I don't care what the tax record says, and you should quit looking at them.
Okay.
They have nothing to do with the market value of anything.
Okay. All right, good. So now what about the insurability in Florida? Do you know anything about that?
I don't know, because that depends on what your test is going to show. In other words, if that place is not prone to any more sinkholes, it shouldn't affect your insurability, nor should it even come up. If it has got sinkhole problems, and it looks like it's going to be, fall into the ground, you're not going to buy it anyway, are you?
No, not for the land.
So I'd put it under contract, the cheapest price you can get, and I can tell you right now, it ain't going to be 40 or 50.
What would you put it in at?
Unless you suspect that the house that's on it is where you can get your value at, because you don't think it's going to have an existing sinkhole problem. All you have to lose is the cost of that inspection, and you will lose that if you don't buy.
And then at that point, we can go in and renegotiate.
Well, let's suppose that it doesn't look like it's got sinkhole problems.
Okay.
Well, you may not want to renegotiate. You may just want to buy it.
Exactly.
Yeah. Let's say it does have sinkhole problems. Well, your report ought to tell you what it's going to take to fix those problems. Just because it's got potential sinkhole problems doesn't mean it's not fixable. But, again, your report will guide you. What it's for.
What will guide me?
Your report, the report that they come out there and do to determine the validity of future sinkholes.
Yeah, from the engineer. Okay, good.
So what's stopping you from buying this house for $30,000-$40,000 and putting a tenant in it and insuring it?
I considered that.
Okay, well, I think that's probably the worst case scenario, isn't it? Because even if that report comes back negative, that thing could sit there for another 500 years and not sink into the ground.
Exactly. Still a good deal.
There, yeah, correct. So don't get it under contract first, then do your due diligence, then you'll know what to do.
Okay, awesome. Thanks, Ron.